Going to look at the money laundering, 12-mark question, 3.2 ZiCA. And under part A, we shall say what is money laundering and the stages, and you give examples, 6-mark. Then under part B, we shall look at anti-money laundering policies and procedures that an accountant should establish. Okay, so what's the meaning of money laundering? So money laundering is a process by which criminals attempt to cancel the true origin and ownership of the proceeds of criminal activity, allowing them to maintain control over their proceeds and ultimately providing a legitimate cover for the sources of their income. Okay, and money laundering has got 3 stages, and these stages are placement, layering, and the integration. Okay. So placement, this is a process of getting money into the system in the first place through bank deposit or through a business front, being a legitimate business used to launder money. Okay, so you get the money system through bank deposits or in the business front. This is a legitimate business used to launder money. Then there's also layering. Now, layering, this is the use of lots of different transactions to create so many layers between the initial placement of dirty money and money that is taken out, which is difficult to trace. Okay, and they use lots of different transactions to create so many layers of transactions between the initial placement of dirty money and the money that is taken out, which is difficult to trace. Okay, and then you have got integration. This is the extraction of funds from the laundering system and integrating them back into the legitimate and usable use. Okay, this is extraction of funds from the system and integrating them back into the legitimate and usable use. Okay, then what are some of the examples? Examples, we can say handling proceeds of criminal activities. Examples, handling proceeds of criminal activity. We can say arranging or acquiring criminal property, and this involves involvement with tax evasion. So say arranging and acquisition of criminal property. For example, acquisition of criminal property. For example, getting involved also in the tax evasion. Another example is tipping off. Now, this is when a money laundering officer gets involved. When a money laundering officer or someone in the firm, such as a money laundering officer, reports to others or discloses to the third party something he suspects that might prejudice with any investigation. Okay, that is an example of tipping off. So when someone in the firm, such as the money laundering reporting officer or others within the firm, discloses something to a suspect that might prejudice any investigation. Okay, so when you disclose to the third party, or the suspect this will prejudice with it should be a prejudice to the investigation. Then we have failure to, when you fail to disclose money laundering activities to the competent authority by the auditor, that is an example of an offense. Okay, so failure to disclose money laundering activities to a competent authority. Failure to disclose money laundering activities to a competent authorities by the auditor. Okay, so these are examples. Don't give examples like, no, that's year one vomits money, that is money laundering. No, Faith Musonda was found with money in the house. Those examples, we are not preaching. Okay, I'm not preaching it. These are examples that you should give. Then part B, let's look at what are the anti-money laundering policies and procedures that an accountant should establish. So one, you need to appoint a money laundering reporting officer and implement reporting procedures. Okay, now a money laundering officer should be a senior member of the firm who has relevant experience in the matters relating to money laundering. Okay, so all staff in the firm should make reports to the money laundering reporting officer of the money laundering issues they encounter during the course of their professional duties. So the money laundering officer will then decide whether or not to report such cases to the competent authorities, and in this case, the Drug Enforcement Commission. Okay, so this person should be a person of suitable seniority and experience, and he shall report to the Drug Enforcement Commission. So in B, we also need to train staff. Okay, that's another policy. You need to train staff. Now, the training policy of the firm should include, among other matters, training staff and making them aware of the relevant legislation on money laundering. Now, what is it that the staff should be aware of? Staff should be aware of how to recognize that there is money laundering when it exists. So when you're training staff, you are telling them, says you should be aware on how to recognize that there is money laundering when it exists. How to recognize that there is money laundering when it exists. And then you're training them how to deal with any potential and actual money laundering. Okay, you're training the staff how to deal with any potential and actual money laundering activities. Then how to and to whom money laundering activities should be reported. You need to train staff how and to whom money laundering activities should be reported to. Okay, you don't report to your pastor. The pastor, when he discovers that there is a huge amount of money in a room, you just get that money and go and buy cement for the foundation of the church. Okay, so you need to know whom to report to. In this case, the money laundering reporting officer. Then you need to train staff how to identify clients who may be involved in money laundering. How to identify clients involved in money laundering activities. So don't say no. You don't identify. You don't just pick anyone. I think he have a renounced girlfriend. is involved in money laundering, you need to have special training on how to identify a person involved in money laundering. Okay, so the firm policies, so you need to train staff on the firm policies regarding money laundering and the existence of the money laundering officer. Finally, you say you need to train staff on the firm policies. Firm policies regarding money laundering and the existence of the money laundering officer. Firm policies regarding money laundering and the existence of the money laundering reporting officer. Okay, that is one of the procedures. The third procedure, we shall look at internal procedures. Okay, that's another procedure that you can implement. Internal procedures within the firm. Now, the firm should put in place internal procedures that will prevent money laundering, okay, and ensure that staff are made aware of the procedures. Okay, and these procedures are the client acceptance procedures, gathering know your client information. Okay, this is about dealing with the client funds through the client account, the firm that may have. So dealing with the client through the client's account that the firm may have, and the internal procedures will include advice and services. Advice and service that the firm could do offer to the money launderer. Okay, advice and services that it could offer. So another procedure, so we'll look at appoint, train, and then train internal procedures. Shall also look at verification of the client. So we need to verify, need to know, are you dealing with the Chinese people? Are you dealing with a Zambian? So verification of the client identities. So verification of the client identities. Okay, I'm not talking about the firm should ensure that they know their identities well. Okay, this means establishing that the clients who they claim to be. The firm should verify any new clients and also evaluate and verify the identity of the existing ones. So the firm should have documents, identities of their clients on file, and this includes copies of passports, driving license, and utility bills. Okay, because most of these guys they can be scammers, you see. So when you come up with all these documents, at least you are assured of the identities. Then you need to have so verification of identities. So I'm talking about you need passports, utility bills, driving license, and all that. Okay, so verification, and then you need to have a record keeping. Okay, the firm should have a policy with regards record keeping and ensure that the firm maintains record of the client identification. So keep record of the client identification, what we talked about here. Keep record of the client identification. Okay, and you need to keep a record of the transaction undertaken for and with the clients. This is important to the firm in order for the firm to avoid participating in transactions involving money laundering. So you need to keep records of transaction. Okay, so basically those policies and procedures. Now, in conclusion, what can we say in conclusion? there are a number of ways, okay, that the accountant could become involved in money laundering. It is important for the firm that it has adequate procedures in place to ensure that it does not fall of money laundering registration. And so you need to ensure that these police procedures are adhered to. Okay, yeah. So that was 12-mark question. I can give you examples of money laundering which can appear in real life. For instance, in retail, where are using a program called SAP. Now, this sometimes can become porous. Okay, you can have someone who has a super user. Okay, this person can order for you. Okay, you don't know this person. If you're using SAP, if you not use SAP, you go to MB51 there, and you check on this acknowledgement on delivery. You find that there will be transactions which you did not order. Someone ordered for you. Okay, so this someone will order for you, and he will capture the invoices for you, and he will pay himself. So he will use people to do the ordering. Someone will capture, maybe data capture, and you create an account for payment. So all this money goes to their account. So it can be, people can organize themselves. Meanwhile, at the store level, you are not checking your end of day transactions. And you see that on end of day, the system shows that you ordered something which was captured. Meanwhile, stock was not delivered to your store. When you do your stock take at the end of the day, at the end of the year, you have a shrinkage. Okay, and this shrinkage is as a result of these goods which was ordered by someone you don't know, was captured, okay, and payment was made. Okay, that is this is what comes under layering when I say stages, where dirty money with another transaction. Okay, another instance is where you can have maybe 3.5 in your journals, and then in the revenue it might show 5.5. This 2 million can be something that can be done through a foreign transfer transaction. Okay, being a dirty money. So there are so many examples of, but these are practical. You don't put that in your exam. Just need to show you that these things happen. Okay, when the president says the treasury is empty, where has the money gone? So all these things, when you are a public account auditor, you need to be skeptical about these things. Okay, so that is a topic on money laundering. Thank you.